Welcome back to another video. In this video, I'm going to be reviewing financial education Jeremy's portfolio. We will see if he ends up posting this on his story. I'm also in his stock market membership group. It's been great. I really didn't know what I didn't know, and you guys should go in there. Join us in there. Join us in the Discord. We'll have some good times and make some money. I really love this guy's videos. This guy is the reason why I got really into investing, why I'm really excited about investing, why I'm really excited to get you investing and making some passive income and just building wealth, getting out of that place that you're in life, whether that's a good place or a bad place. I want it to be an even better place. With all that said, Jeremy, I'm probably going to not agree with you on most of these. Jeremy put this challenge out a long time ago, and I figured I'd do it. So we're gonna be doing today
smash or pass.
Why smash or pass? Well, that's because I'm doing exactly what other YouTubers did, but I want to be unique, okay? I'm unique. So 2 to 3 good things, 2 to 3 bad things, and do I own it? Will I own it? And smash or pass. We're gonna go in reverse order as far as allocation. We're gonna start out with Tapestry. Ticker symbol TPR. So what do I like about this stock? I think it presents a good value at this valuation. I think that it's got a great dividend. I've actually been tracking this recently. I've thought about, like, thought about doing the buy order. Haven't done it personally because I just don't see the business model being as great as Jeremy sees it at this time. So what are those bad things that I'm seeing? Well, one thing that I'm seeing is growth under 7%. I really don't like that. I like the growth to be towards 10%. You know, if it's not going to be a growth stock, I want to see a very consistent business model. The business model is pretty consistent, but it is a dying field, the retail space. Retail is dying as an industry, so I really don't like that. The other thing that I don't like is that I like to invest in businesses that I have personal connection with. They are a panty seller, and I am not a panty buyer. At least not on the record. Bruh. Just pretend you didn't hear that, and I'm not a panty buyer, and for that reason, I'm gonna have to go with pass on this one. Next one, ticker symbol JWN, Nordstrom's. What's good about this business? I like that it has a high dividend ratio. I like that it has a high dividend yield, great payout ratio, or gate payout ratio. I don't know if they pay out gates, but anyways, that's what I think is good about the stock. Bad, they have retracting growth year over year, so they are shrinking. Like we said before with Tapestry, the entire retail space is shrinking, and I really don't like that shrinkage. No one likes the shrinkage, so we're gonna pass for that reason. Next one is iRobot, or as he says, iRobot. I love when he says that, man. I love that man.
I love that man.
So today is October 23rd, and I'm doing this super late, and today Jeremy posted this on his story, and he made a huge buy in iRobot, and he made a lot of money on it. Man, I almost did that this morning, but as Jeremy will tell you, and as anyone who's a good investor will tell you, do not buy things because someone else is buying things. Buy something because you have a strong conviction, and I do not have a strong conviction in this company. I see the numbers make sense, but I really don't understand the business. I don't see the long-term potential. I see a lot of imitators. Like, you go to Costco and you see all kinds of stuff that kind of imitates iRobot. You've got a lot of competitors in China, and quite frankly, I went home one time and my parents had a little iRobot, little Roomba vacuum cleaner, and I personally, I just think the vacuum sucks. Like, I think the product sucks. So if I don't believe in the product, I don't understand the business, and I would only be investing in it as a swing play, I'm gonna go with pass on this one. So we've passed every single one of his stocks. For the most part, I think Jeremy's a great investor. I think he's gonna make a lot of money in these stocks, but I'm passing in this. I'm not going in on this one. Wynn Resorts, aka Winning Resorts, according to Jeremy, you will not be winning if you go in there. You will be losing to the house. But let's see if Jeremy's gonna win on this stock. I think I'm pretty confident that he, over the long term, he will win with this stock. All right, so what I do like about this stock is that it's got a solid dividend yield over 3.5%. I like that it has a PE below the sector median. It's in other words, it's selling at a cheap valuation. I really like that about Wynn Resorts. Something that I do not like is that there's a lot of uncertainty around the trade war. In my opinion, the first thing that people are going to cut is just those discretionary trips. People are not going to be, making it rain in the club. They're not going to be going to these casinos and just blowing all this discretionary money that they do not any longer have. One point that Jeremy would make is that, Wynn Resorts kind of caters to the higher end people that don't really run out of their discretionary money. So, I can kind of see that. Overall, I think there's better stocks in the market. I'm going to give this a 4 out of 10, and I'm going to pass. e.l.f. Beauty, aka e.l.f. This is a beauty company. I actually was exposed to this for the first time in one of Jeremy's videos, and then the very next second, I saw my girlfriend at the time used it. She used all their products, and then the next morning I wake up and the stock shoots straight up to the sky, and now Jeremy's up over 150% on the stock. So congratulations, hand clap to Jeremy. Will I be buying this? No. One thing that I do like about e.l.f. is that they're spreading very quickly. Their name is very widely known amongst women, of course, and me. Not that I'm not a panty buyer. Let me just reiterate, I'm not a panty buyer, and I don't put on makeup on the weekends, okay? All right, you're not gonna catch me at happy hour at 9:30 at Capitol Hill wearing makeup and panties. Negatives for me are I have no personal connection with this brand. I really don't understand it. I can see the numbers, like you can flash the numbers right in front of me all you want to, but when it comes down to it, I'm much more comfortable in something like a McDonald's or a Costco, just because I understand that. I understand it as a consumer, and for me, if I don't understand a business as a consumer, I just can't do it. Like with the iRobot position, I think the product sucks. I would never buy it. So I just, as an investor, how can I invest in something that I don't like? Not that that's not the end all be all, but for me, I just can't have the confidence to hold through bad times if I think the product sucks. Not that I think e.l.f. sucks, I just have no personal connection to it. They've had negative growth for the past 2 years, so I'm gonna give this one a 5 out of 10, and I'm gonna say pass. Next stock on the list is Uber, aka ticker symbol Uber. So Uber, I think that they have huge growth potential. They are growing massively, and that's a really good sign for me. It's one of the spec stocks that I actually do own. For Uber, I see that they have nearly unlimited access to capital, and I think that they're at a reasonable valuation now. I think that they should drop a little bit lower, but at this point I have started to buy in a very small way, and in a very small way I do mean a very small way. It's in one of my M1 finance portfolios, and I've got $4 in it. So it's like almost a pass. It's so small that I pretty much don't even own the stock. So let's get into the bad with Uber. The bad things are the margins. I really can't see where they are gonna get to profitability with the margins. As a driver myself, I used to drive for Uber a little bit, and you already don't make that much money with Uber. So, you can't really cut that pay too much down more. They're just gonna have to get to self-driving, if you ask me, in my personal opinion. They've had bad PR with their drivers, so if they try to cut even further on their drivers' pay, that's a huge liability as far as paying drivers. And currently they are just losing billions per year, so I am sticking my foot in just a little bit into Uber because I think they have a massive growth potential. At a minimum, I think that Uber could be useful to someone like an Amazon or somebody who can utilize their infrastructure. The next one is Fizz. So definitely this one is not my cup of tea. I think they might sell tea. The good thing about Fizz is that it is pretty undervalued as it is, as the business operates now, in the environment that it's operating in now. But my problem with Fizz is that if you were to knock me out and then wake me up 3 to 5 years from now, I don't know what Fizz would be doing. Are they going to be innovating? Are they still going to be profitable? Are they going to be bigger, smaller? I don't know where they're going to be. So that's kind of my own ignorance as far as the business. But additionally, I feel like they have so much competition from other big drink makers like Pepsi and Coke that I would rather just own those companies, because those companies have the cash on the balance sheet to make acquisitions. And I just don't really think that Fizz is going to I don't think that Fizz has any competitive advantage, no moat against somebody just copying their drink. They're a drink maker in the end of the day. So I'm going to give this one a 2 out of 10. Congratulations on making money on it, Jeremy, but I'm gonna pass. The next one is Tesla, and I've been passing on all of these stocks. You guys might be a little bit surprised to hear this, but I'm gonna have to smash that like button if you haven't already, because it helps the YouTube algorithm.
Please smash like.
Jeremy talks about Tesla enough. If you're a fan in any way, you already know there's the robo-taxi network. They're growing revenues at a crazy rate. Elon Musk, in my personal opinion, I think he's a genius as a CEO, and he knows how to make a profitable company. So right now he's just focusing on expanding the revenues, and that profit will just come as soon as those margins get a little bit better, which is another bad thing. Those margins are pretty uncertain. As soon as they can get those margins better and get these factories built out, I really do think Tesla is going to be possibly even the only car company, if not just the biggest car company. So I'm not going to say that this is not a speculative play, but I am pretty confident in this company. Before I sold off my shares, not because I was trying to get rid of Tesla, I sold them off to pay off student debt. I had about 15 shares of Tesla, and I plan to get my position built back into Tesla. I hope they have bad earnings today, so that I can get them for a little bit cheaper, because I do have a good long-term thesis on this company. So smash, and I'm gonna go to the next one. All right, Cirrus Logic. I don't really have much to say about this one. One bad thing that I had to say about Cirrus Logic is that they are so dependent on iPhones, and I do not like that with the whole Huawei situation. And I'm gonna kind of lump Cirrus and Skyworks into the same thing, where they have so much dependence on iPhones that I really don't like that. That's a little too risky for me. I think they're great business models. Do I think Jeremy will make money on them? Yes. Am I buying them? No. 2 out of 10, double pass. And our last stock of the day is going to be Facebook. Now, I love Facebook, and before I sold off all of my portfolio, I did own some Facebook shares, and I do plan to own some Facebook shares into the future. I think that this is an easy money stock. There's nothing wrong with this company in my opinion. The balance sheet is great, the profitability is great, the growth is great. They do get a little bit of, they get some jabs from political, I was gonna say political adversaries, but I mean, they kind of are political adversaries from politicians. Elizabeth Warren wants to break up the company. Bernie Sanders wants to break up the billionaires in general. But I think that they're going to win those. If they end up in legal battles, they're going to win those. So I think that if there's one easy money stock in the market, it's probably Facebook. If I had to own one stock in my entire portfolio, I would actually consider Facebook. But if I had to pick, mine would be down in the comment section below. Comment down below what your one stock would be, and give this video a thumbs up if you liked it. Hope you got some value out of it, and I'll see you guys in the next one.